Hey there, Jason Gold here again, back for another episode of Investor Insights. This is where I give straight talk on all things investor relations. So today we're talking about something that I call the 3 keys to having a stock that properly reflects your true value. So what are they? Let's get started. Number 1 is having a good story. What does that really mean? Well, first let's set it up and think about it. CEOs, CFOs, people in IR, they spend all day, every day, 40, 50, 60 hours a week or more thinking about just their company. So they know everything that's going on. They know every detail. The reality is the best investors in those companies spend 2, maybe 3 hours a quarter thinking about that company. So think about that difference. 60 hours a week versus 3 hours a quarter. And there's 13 weeks in a quarter. So you can imagine the huge disparity of information flow between what the management team knows and what the very best investors know. Now, further, let's think this through. That's the best investors. Now, there are lots of other kinds of investors. People that spend 30 minutes, 1 hour a quarter, maybe 1.5 hours a quarter. Either way, there's this giant discrepancy between what management knows and what the street really knows. And further, think about how the sell side works. Back when I was doing this a long time ago, a sell side analyst might cover 8 stocks, 10 stocks, 12 stocks. Today, the best analysts are covering 35, 40, 45 stocks. People just don't have the time and the bandwidth to spend understanding every nuance of the story. Now, please understand, there are some really good investors out there that will get to the bottom of everything. This isn't about them. This is really about making sure that you, the management team, properly convey your story to the street in a way that they can understand it and that they can remember it. If your story is complicated and there's a million moving pieces, people aren't going to pay attention because it's not a story that they can remember themselves and tell to their friends. Why does this really matter? Well, let's think about it. Most of the people that you're talking to are analysts of some kind. Maybe they're the decision maker, but for the most part, they're analysts pitching the stock internally to their portfolio teams to say, we should buy it. So an analyst needs to understand exactly what's going on at your company so that they can turn around and say to their boss, hey, boss, listen, we need to buy XYZ because of 1, 2, and 3. And that 1, 2, and 3 needs to convey what makes you special, what makes you different, why your growth should be better, why the street really doesn't understand and needs to get involved in you now. What are things like that? Product cycles. New products really get people excited. Market expansions. That gets people excited too. How about things like new management that's making cost cuts and realigning the business? These are things that people can really get around. And if your story is complicated, has a lot of moving parts, figure out what is it that's moving revenue and EBITDA or operating profit or cash flow, whatever those metrics are, and focus the story around those things. That will make your story easier to tell. So now someone can tell their boss, hey, boss, we need to buy XYZ stock for 1, 2, and 3 reasons. They can tell themselves. Think about what happens when the stock goes down. People have a crisis of confidence when a stock goes down. But if someone can remind themselves, well, I own this because of 1, 2, and 3, that will get them to buy more. If your story is complicated and millions of moving parts and someone can't remind themselves very clearly why they own the story, when the stock is down, they're likely to be a weak hand and a seller rather than a buyer. And the last audience that you're really catering to is the ability for the analyst to retell this story not only to his or her boss, but to his and her peers. Investors go to idea dinners, they talk to their friends all the time. Hey, what do you like? What do you like? Who did you see at the conference? What sounds good? You want people to be able to say, I love this company because of 1, 2, and 3. So, what am I saying here? Have a story that easily boils down into 2, 3, 4 bullet points at most. You don't need 10 different things, but make it a story that people can really rally behind and understand what you do and what's moving the needle. The second thing, number 2, is having numbers that support your story. Well, what does that really mean? If you're telling a story about your company, you need to give evidence that what you're saying is actually true and happening in real life. Now, You do get to report your numbers every 90 days. That's what the SEC requires you to do, and most companies have conference calls. So it does give you an opportunity to tell everybody the required disclosures. Those are things like revenue, operating income, earnings per share, and cash flow. But if you're going into a new market or you have a new product, there might be lots of other elements to your story that aren't in the required set of numbers that would be helpful for investors to understand. I recommend to most of my clients that they publish what I call a supplemental data sheet. That's a document in the back of their investor presentation that has an additional set of disclosure metrics, things like bookings, backlog, billings. There's lots of different things that companies can disclose that would help investors understand the progress that they're making towards the achievement of the goals they outlined in their story. And so every company is different, but whatever story you're telling, you need to have a set of numbers that an investor can go out into the field and do his or her own research to verify is actually happening. If they can do that, and those numbers support your story, now you have a group of investors that say, well, the company is telling me one thing, but I've been trained to trust but verify. Now they're out there verifying in the real world what you're telling them. For example, you have a new product and you say it's going to be 2 times the price of your existing product. You can be sure that investors are going out into the marketplace and calling customers to say, did you buy the product? Do you like the product? And importantly, what did you pay for that product? If they're hearing, yep, the new product costs twice as much as the first product, they're verifying the story you've told them. If they're hearing, no, the company is discounting it and we can't get nearly the same price that we were getting for our previous product, investors are going to be shooting against you. So you need to think very clearly about what numbers you want to disclose and what you want them to go find. But it is critically important that you give them something that they can go out in the field and look at. In essence, this is what enables somebody to own a stock, because they get anchored to a set of numbers 1, 2, and 3 years out based upon the story that you're telling them. We have this new product, it's going to be huge. The price is 2 times the previous one, the margins are better. That would yield this huge expansion in revenue and operating profit. Investors are going to go out and verify that. So give them a set of numbers that aligns with the story that you're telling. Be conservative with what they are so that there's an opportunity for you to go out and beat and raise those numbers, which we'll get to in a minute. But make sure you give people a set of numbers that go with the story that you're telling so that investors can do their own research and anchor to what you're telling them. Remember, there's 90 days between quarterly reporting periods, and investors want to be active in researching your company and verifying the things that you're saying are really true. Give them the ability to go out into the field and prove out your story by giving them numbers. Number 3 is to have credibility as a management team. What does that really mean? It means that you need to act like a humble, responsible leader. I see CEOs all the time that every day is bullish. Everything is great. No matter what you see, no matter what the results are, we are fantastic. And you know what happens? Investors don't like them. Investors learn not to trust them. I had a client that missed their quarter and the CEO got up and told everybody how great they were. And people stopped listening to them. People need to know that they can trust you. And so if things aren't going well, you can still be excited about your long term. You can be excited about your competitive positioning, but be humble and tell people, well, these things didn't go as well as planned. Here's what happened. Here's what we're doing. Here's how we're fixing it. That's really advice for CEOs. For CFOs, it's around giving guidance that, one, gives you the flexibility to operate your business because there will be bumps in the road, but 2, gives sufficiently conservative guidance that if you hit your plan or come close to it, that you are consistently beating and raising your guidance. Frankly, that is one of my favorite elements of company management. If they're able to consistently beat and raise the guidance forecast that they've given us, it shows me that management has control of their business, control of the street in terms of controlling their estimates, and they understand this game that we call beat and raise. It's really important because investors really like companies that have consistency, that they can rely on management to do what they say. And having conservative enough estimates that gives you the flexibility to operate your business and also beat and raise, that's something that the street will grow to love about. So I'm going to begin to wrap up. I'm going to give you a summary here. Number one, tell a good story. Number two, make sure you have numbers that reflect that story. And number three, make sure you have management credibility that supports numbers 1 and 2. So that's it. If you have a lagging stock, you work at a public company and you're just not getting the valuation that you deserve, you can go to my website or you can click right here, the link below, to download a free blueprint for how to evaluate your investor messaging and KPIs. I think it'll be really valuable. As always, thanks for listening, and I look forward to seeing you next time.